All right, let's dive into the absolutely wild story of one stock, Rigetti Computing, ticker RGTI. I mean, this is a classic Wall Street drama playing out in real time. You've got this incredible, almost unbelievable momentum crashing right up against some serious, flashing red flags. So what is actually going on here? Let's break it down.
First off, you just have to look at this number. In only 3 months, RGTI stock has shot up over 200%. Look, that's not just growth, that is an explosion. And moves like this, well, they get everybody's attention, which is exactly why we're digging into it today.
So how in the world did we get here so fast? This timeline, it shows the acceleration perfectly. You know, the summer started out pretty normal, a steady climb from $13 up to around the $20 mark. Then, after kind of pausing in September, it's like someone hit the launch button. The afterburners just kicked in, sending the price screaming all the way past 40. This, my friends, is what we call a parabolic move. The chart has gone almost vertical.
Okay, so let's really unpack that. In this first part, we're going to look at the forces that basically strapped a rocket to this stock. We'll focus on that insane momentum and, of course, the speculative frenzy that poured gasoline on the fire. And let's talk about volume, because this is just staggering. On a totally normal day, you might see, 30 to 80 million shares of RGTI get traded? But during that massive surge, the volume exploded to a peak of 193 million shares in one single day. That is not your typical investing. That's a giant neon sign flashing intense speculative interest.
Now, with that kind of horsepower, you can see why a lot of people think the party is just getting started, right? So let's look at the bullish case. We're going to dive into the technicals that are all screaming that this powerful uptrend could have a lot more room to run.
This table right here, it gives you the perfect snapshot of the trend's strength. These are the moving averages, basically the stock's average price over different time frames. And the current price? It's not just a little bit above them. It is miles above all of them, from the super short-term 5-day all the way out to the long-term 200-day. From this angle, it is all systems go.
And it doesn't stop there. Oh no, a whole bunch of other technical indicators are flashing the exact same message. You've got the Arun indicator at a perfect 100, which basically means maximum possible trend strength. And then there's one called on-balance volume, which shows that big money is flowing in, not out. It's like a united front of technical signals all pointing in the same direction, up.
But, and this is a big but, this is where the plot thickens. For every action, there's a reaction, right? Now we have to look at the other side of the coin. We have to look at the warning signs that are suggesting this incredible strength might be, well, dangerously overextended.
Okay, before we go any further, we absolutely have to understand this one key term, overbought. Now, this doesn't mean the company is bad or the stock is a dud. It just means it's run up so far, so incredibly fast, that it's statistically way more likely to need a breather or maybe even a sharp drop to cool off. Seriously, think of it like a car engine running way into the red zone. And this number? This is that engine's tachometer needle, and it is buried in the red. This is the Relative Strength Index, or RSI. Anything over 70 is already considered overbought. RGTI's RSI is sitting at a blistering 86.72. That is one of the loudest warning bells you can get that this thing is running dangerously hot.
And here's another one. There's an indicator called Bollinger Bands, and it basically creates a price channel, kind of like guardrails around the stock's price. Well, when a stock is slamming against the very top of that channel, like RGTI is, it suggests it's at an extreme high compared to its own recent volatility. It's another way of saying it's stretched way too thin.
You know, this number might be the most shocking of them all. Based on its own trend over the last few months, the stock should be trading way lower. Instead, it's trading over 50% above its own trend line. The price is completely, and I mean completely, detached from its own recent path.
So here's the bottom line, what this all comes down to. We are watching a technical tug-of-war in real time. On one side of the rope, you have every indicator you could want of a powerful, confirmed uptrend. And on the other side, you have every possible sign of a stock that's been stretched to its absolute breaking point, just screaming that it's overbought. So this brings us to the million-dollar question, doesn't it? What happens next? When you have data this strong, but this conflicting, there are really 3 distinct paths this stock could take from here.
So here they are, the 3 big scenarios. The bullish case is pretty simple. If this crazy momentum can just push through that recent high, it could trigger a whole new wave of buying.
maybe taking it towards 50. Then you've got the bearish case. If it can't hold on to a key support level, you could see profit takers rush for the exits, causing a pretty sharp drop. Or, scenario 3, the neutral one. It could just enter a chaotic sideways grind as the bulls and bears just duke it out.
Okay, so if you want to know which of those scenarios is actually playing out, these are the numbers that matter. Think of 40.63 as the ceiling the bulls have to smash through, and 34.53 is the floor they have to defend. Watching how the stock behaves at these specific levels is going to give you the best clues about where it's headed next.
So, we've weighed the incredible momentum against the very stark warnings of exhaustion. What's the final word here? What's the takeaway? Let's bring it all home. The analysis really doesn't pull any punches. The main conclusion, loud and clear, is a call for extreme caution. The move has been so fast, so speculative, that the risk of a sudden, sharp reversal is exceptionally high, no matter how strong the trend feels right now.
And really, this gets to the heart of the whole thing. Yes, the trend has been unbelievably powerful. You can't deny it. But the signs of exhaustion are also undeniable. The stock is at this critical tipping point, where the risk of a painful pullback is now every bit as real as the potential for another huge surge.
And that leaves us with one final big question to think about. When a market gets swept up in this kind of speculative frenzy, driven by emotion, how do you tell the difference between powerful optimism and just plain old danger? The story of RGTI is a perfect and fascinating case study in that very challenge. Thanks for tuning in.